September 15th, Thursday, market analysis, Stan Ehrlich. Been having internet problems for the last couple of days. This morning so far, everything's working fine. So I didn't record yesterday's market analysis, and I'm going to leave it that way. The day before yesterday, on Tuesday, I said I thought the market would have a day of rest, maybe, and that's exactly what it did yesterday. So if there was a day that I missed the recording, that was a great one. Nothing happened of any consequence. Let's watch the S&P here move around. That's my go-to index. You can see that the market made a minor new low yesterday for this break on the downside and closed a little bit higher on the day. Nothing particularly significant. A minor new low and a higher close. Some people might think it's a reversal. I think it means almost nothing. They're so common and so unreliable, I consider it to be unimportant unless the ranges are really large and do something particularly interesting. So yesterday was a resting day, and that's fine and dandy. Resizing, going to my 1 minute chart, and you can see that yesterday's activity was in fact mostly sideways, excuse me, making a very minor lower low early and even late and popping back reasonably well. This morning, now we're talking today, Thursday, the 15th of September, we came up very close to yesterday's high, and it didn't make a higher high, so a little bit of resistance here stopped the rally. Market came back down and started to chew away at the lows of the previous day, yesterday, Wednesday, and made lower lows. Now I'm going to start going back to the daily data again, because now it's very, very important to look at what's happening. We have today so far, and the time is 9 o'clock California time, middle of the day basically, a low lower than yesterday's low, which was lower than the previous day's low. Now that Tuesday was the big crash day. That was the day the market gapped down, leaving an island top behind. There's an island top up there, Monday of this week, and pretty much the nail in the coffin. I think, here comes the forecast, we're about to crash. I don't use that word lightly. If we start making lower lows again, I think it could be 30 minutes, an hour, very, very soon, we're going to start hitting stops below this little support area, which is 390.04, I believe was the exact low on this day, correct? The low here was 390.33 and then 390.20. Those three lows represent some decent support, not great. We've already come down to 390.37, so you can see how close. We break 390.37 today's lows, and I think it's going to drop very fast and very quickly to the lowest low, which is 388.42. Bye-bye, sayonara, hasta luego. It's going to start dropping much faster. We will be making new lows. Since the low of July 19th, breaking some support lines that I drew in here probably a few months ago, and challenging the last significant support area that we've got until the bear market lowest lows are broken. And again, that was on June 17th, and way down at 362.17. Call it 362 at the moment. So from the low that's important now, which would be at the low of 88 to 62, what's that, 16, 26 points? Yeah, 26. Not that far away. We just dropped almost 20 points on Monday. One day. Now I want to remind you, as I have done so for a couple of weeks now, the October lows are coming up. The month of October has a history of providing a buying opportunity, a low, extremely frequently over the last approximate 30 years. I'm going to say easily within the 80 percentile likelihood, if not the low 90s. I forgot what the exact number was. It really doesn't matter. It's just hugely likely. So in the month of October, which is around the corner, what is it? 2 weeks away? Yep. For the next 2 to 6 weeks, from 2 to 6 weeks from now, I am expecting a significant buying opportunity in a bear market. So I'm not expecting any bull market to start, but maybe a rally for a month or two. I don't know yet. Let's see what happens in October. So we're going to go down, in my opinion. Whoops, I keep doing that once in a while. Bad habit. Oh, again. Into the month of October. All right. What's going to help us go down there? Well, interest rates. I just saw a CNBC email saying we have just now made the highest 30-year fixed rate levels since I think it was 2008. A long time. 6.02% or something like that. I think that's going to continue. Rates are going to continue to go up. Market doesn't usually like that. It means lower levels. That's one thing. Another thing, energy, crude oil. Although down today, and a fairly decent down day, has to make a low lower than the low made on September 8th on a closing basis in order to make me think that crude oil is going to go down even more, which would be friendly to the indexes, stock market in general, because inflation might possibly being abated to some degree. So we'll see what happens there. This is kind of iffy in my opinion at the moment. If we turn around and rally strongly in crude, then it's going to be inflationary, and it's going to make me more convinced that the oversold condition we had for a couple of days here on a false bearish breakout was a false bearish breakout, and we're going to go up. Also, we have a buy signal just a couple of days ago in the natural gas. We had a bullish ER signal, bullish engulfing in oversold conditions and turning the price action green for a buy signal. We bought almost the exact low tick the next day, almost the exact low tick. And then yesterday it rallied very nicely and sharply, providing a real good trading opportunity or profit if you did it the way the system's built. Now today we made a low lower than the previous day and challenging that exact entry point 2 days ago, but it's not lower than that. And we probably would have gotten stopped out or exited the trade, lasting only about 2-3 days. So it is also a little iffy at the moment, like crude for natural gas. Let me look here for any green or red real quick on a lot of these other charts. I see gold is getting a little oversold, and it's made a new low for the trend. All right, that's interesting. Something of any consequence here. I am not finding out. We're oversold on 10-year notes, and we're still short, by the way. This is worth showing you. We had a bearish engulfing sell signal and the ER bearish signal on 8/6/21. Sorry, 8/5/21. The system rode the trade down all the way until finally July 1st of this year, where we took a gigantic profit. We recently had another bearish sell signal on August 2nd, August 2nd, and it was filled on August 4th. A signal is not a trade. A signal means we want to go long or short. The actual fill may or may not occur depending upon the way the market moves. Lots and lots of my signals are good and they're never filled. The market just runs away from me. I'm talking about the ER3 trading technique. The ER1 is different. It gets you into a trade every single time. So it's a little different. I'm not going to go into it right now. But we are short from the ER3 ER signals that happened on August 2nd, and we are still short. This green trade line should be tracking down to right there, and our trailing stop is now starting to lock in a little bit of a profit. Great. So 10-year notes going down means rates are going up shorter term than the 30-year long bond. I'm going back to indexes and our S&P. We are almost low and last. Going back to our 1 minute, and yep, we made new lows just a few minutes ago and looking like we're going to make new lows again. Ladies and gentlemen, this is about to fall apart, in my opinion. That's all I can say. I got to call it like I see it. We're down currently 4 1/3 on the S&P. I would not be surprised to see this market down between 5 and 10 by the end of the day. And frankly, I wouldn't be surprised to see it down even more than that. Remember, it's fresh in traders' minds and investors' minds as well that on Tuesday we broke almost 17, 18 points, something like that, from close to close. But from high to low is more like 20 points on Tuesday. So why can't it do it again? And frankly, if you go back to COVID days, and nobody likes to do that, we went down a lot more than that in one day. Now, we don't have the epidemic to deal with at the moment, or pandemic, I should say, bigger than an epidemic. But that's the way I see it. All we got to do is start breaking that low right there, 388.42, and boy, we could slide. All right. Resizing the chart. The DIA has almost the exact same configuration. The QQQs have already dropped below the low of a week and a half or so ago, September 6th low. We have already dropped below that low a tiny bit. That low was on September 6th, 290.87, and this morning, a little while ago, we broke down to 290.60. So we already have made lower lows in the QQQ. The Russell 2000 has a little ways to go. The DIA, the Dow Jones, has a little ways to go. But again, we're looking at this in great detail, minute by minute charts. And most people don't do that. But I like to be as accurate and as fine-tuned as I can afford to be. And I don't want to use tick charts, so forget that. I don't have much else to say this morning. I'm glad my system's up and running. The internet seems to be working fine this morning. No problems. I'm going to sign off, except I want to say, go to the Foundation for the Study of Cycles website, Foundation for the Study, FSC.com, Foundation for the Study of Cycles. They've got tons of information on historical rhythms. As you may know, I invented the Ehrlich Cycle Finder in 1977, so I am a cycle buff, if you will, and like to look at cycles frequently and see if I'm getting buy signals, for example, at cyclical lows, and I expect to do that in October in the indexes. or sell signals at cyclical highs. And if they correlate, there's a greater likelihood that the market is going to behave as you expect. Also, I will be using ninja charts, which we're beginning to set up. Here's my exact same page in ninja charts, and we're in the process of changing some of my indicators into ninja script. Okay, thanks a lot. Have a great day. Signing off, Stan Ehrlich.